Dave, thanks very much for joining us from PwC in the Netherlands. Um, I suppose looking particularly at tax, why do you see that as an important ESG topic?
Of course, we have the budget deficit due to the global COVID-19 pandemic, and that really brought back, let's say, the concept of fair tax and paying a fair share of taxes. Secondly, it's also becoming more and more clear that tax is actually needed or crucial to fund sustainable growth and the sustainable development goals. Thirdly, we see a big shift from, let's say, shareholder to stakeholder capitalism. And there you see that companies are engaging much more with stakeholders on various topics, business strategy, sustainability strategy, or ESG, but also, of course, then on tax. Last but not least, we see various green fiscal policies, corporate governance codes of conduct, and they are also really driving, let's say, strategies for taking into account climate change, but also societal issues.
How does tax fit into the various parts of ESG?
If you talk about tax in environmental, then you talk about the various green taxes and the carbon taxes and the big impact there because taxes are actually rising rapidly. So that also has an impact on business models. You also see various subsidies, incentives in this field. So actually also literally money to gain for the transformation into the green economy. If you look at tax in social, you talk about, in essence, about the contribution, so paying your taxes to society to fund public goods and services. But it is also about equal pay and remuneration policies, flexible workforce and topics like that. And lastly, when you look at, let's say, tax in the G of governance, governance is needed for steering and managing tax in the E and managing tax in the S. And then you talk about strategy, talk about board responsibility from a tax point of view, risk management and transparency reporting. So there you can see that tax is actually in the E, the S and the G.
And Dave, in terms of the takeaways, I suppose, if you're an investor or an occupier here, what should they be doing? What should they be thinking about?
The first point is it is really important to engage with stakeholders, also to learn what your stakeholders may expect from you in the field of responsible tax, but also what you expect from your investments. So engaging with stakeholders is number one. So the second one is really about analyze and have a closer look at applicable soft and hard regulations. Then you talk about the SDGs, which actually have KPIs for tax, paying a fair share of tax, do not avoid tax, be transparent about tax, KPIs like that. But you also have other elements like the UN PRI tax guidance, quite extensive guidance on how you can do investing responsibly from a tax viewpoint, but also the GRI tax reporting, quite extensive tax transparency reporting, the NRF code of conduct, of course, and many other regulations, including the sustainable finance regulation in the EU, which also already includes tax. The third one, I think it's important to have a close look at how to integrate tax in your, let's say, ESG strategy. So it is important to have a closer look, okay, what is the ESG strategy of the company and what does it actually mean for your approach to tax from a strategy, governance and transparency reporting. So these are, I think, important steps to take. So engage with stakeholders, analyze regulations, soft and hard, and let's say build or integrate tax in your ESG approach.
Yeah, really interesting to see how ESG is really becoming a key part of a lot of these strategies, I think, for both investors, but also occupiers in general and the banks and finance side, I think. Thanks very much for joining us, Dave.
Yes, thank you for having me.